Hello, everyone, and thank you for joining us at this Your Overseas Home webinar, the Financial and Tax Essentials on Moving to France. My name is Christopher Nye, and I am Senior Content Editor at Your Overseas Home and also France Property Guides, in fact. Now, today I am chatting with Jean-Pierre Çarçabal from Chase Buchanan Wealth Management, all about your financial considerations when moving to France. And Jean-Pierre, I know, is in southwest France, where the weather is not doing you many favors at all. But just say hi, Jean-Pierre. Tell us a little bit about yourself before we get onto your presentation.
Good afternoon to everybody. Thanks, Christopher. My background, I am a dual national. I was born in Beaconsfield in the UK from an English mother and from a French father. I like to say that I am nicknamed in the industry as the Basque from Beaconsfield. I've been in cross-border financial planning for many, many years. And my job is to avoid people who are on this panel, and more generally speaking, people who move from one country to another, specifically from the UK to France, in my instance, or the EU more generally, to avoid making costly mistakes and plan ahead. So our range of services, you will see during my short presentation, is absolutely wide, and I'll do a 10 to 15 minute presentation, which will be generic. Then I'll be happy to take up some questions.
Excellent. Now, once Jean-Pierre has finished his presentation, we'll open the floor up to questions. I've had a couple in that have been emailed in, so thank you for those people who sent those in. I will make sure to answer them, or to ask them rather, on your behalf. Do put your questions into the tab on the right-hand side. We hope to get as many answered today as possible. You will then have the opportunity to, if your question doesn't get answered, please do contact Jean-Pierre and Chase Buchanan Wealth Management directly, and they will answer your specific questions. There are GDPR issues, so we can't talk about specific numbers and specific products. So I have to just ask. So we have to keep things general, but that's fine. We're focusing on tax, pensions, and investments. So that's the focus today, and I guess we will. Oh yes, just one question. Are you able to help Americans? Because that's always the question.
Yes. That is a very, very good question, Chris. We are probably the only company in France who are allowed to advise Americans. We have actually a US company which is chaired by Alex Ingram. I can link up anybody on the panel with him. And we see more and more Americans coming over to France. And it is a very peculiar market which requires extreme knowledge, and Alex and his team are dedicated to helping Americans. And very good point.
Excellent.
Chris.
But for the most part, this will be answering the questions of UK people moving to France. So on that note, I will pass you over to Jean-Pierre. Thank you.
Thank you, Chris. British expatriates, and also we have a lot of people from the Middle East, all walks of life really, who are relocating to France. So this presentation caters to everybody. So Chase Buchanan, who are we? We were established 15, 17 years ago. We are a private wealth management company and have offices in many, many countries in the world. What do we provide? Our offices and our tax essential for France will be the agenda for today. I'll try not to be boring and keep it as lively as possible. I have a line which I like to say as an introduction, is that France is often seen as a very complex country for tax, inheritance tax, but actually if planned properly, France is almost a tax haven. And I'll try and demonstrate that through the presentation and during the Q&A session. So who are we? Well, we're highly regulated, obviously, in this world. Today, everybody needs to be regulated. So Chase is regulated under CySEC, which is Cyprus regulators, which gives us the right to passport in the EU. I am myself regulated in France by the local French authorities. And also we are regulated in the UK. You probably have heard of something that happened a few years ago, which is called Brexit. And that has created a lot of mess in the sense that British expats who come in France can no longer seek or get advice from their British IFA, bank, broker, whatever. So we specialize in providing solutions because we can passport from both countries for expatriates around the world. From our regulated European headquarters, So something which is very important is that we are truly independent. In the industry, there are 2 or 3 competitors who are not independent. They are what we call tied agents. We are truly independent, and we seek the best solution for each of our clients. So our services is quite holistic: investment, financial planning, retirement planning, UK and international pension transfer. That is a big one. You referred to US persons earlier. Through our branch in the US, we can advise on US connected persons, and education fees planning, and life and critical illness. As everybody knows, things can change in life. Planning earlier can avoid, again, costly mistakes. Offices. Our office in France is in Bordeaux. We are 2 looking after France, plus a team, back office, Malcolm McDowell and myself. It's a big market. We have a big market in Spain. Portugal, obviously, is huge. Malta is huge. The US is becoming bigger and bigger. So my market is France. So what I'll try and explain to you is what are the tax essentials you need to know when you consider a move to France. And again, it is very, very simple. So you've got a few different taxes in France. They mirror the ones that you have in the UK. You've got income tax, you've got high income tax, real estate wealth tax, which you don't have in the UK, movable properties. I'll give you an example, and we'll talk about UK pensions. Inheritance tax can be a big issue because, as you know, we are in a civil law country, and as such, we have forced heirship, which can be bypassed very easily if you use the correct vehicle. Okay, first of all, how do we define tax residency? There are a few criteria. The main one is that you live at least 6 months and 1 day, or 183 days in a calendar year. Your main residence is in France. We call that a foyer. The translation in English would be a household. And your assets are primarily located in France. When we call assets, it usually is the main residence. And your principal employment, business or activities based in France. Retiree who get an income from the UK considered as being principally employed by a UK-based company. Everybody in France has to pay some social contributions on every income source. The beauty of that is that once you get into the French system, you get free healthcare, and the level of healthcare we have in France is second to none. I've traveled a lot. It may sound expensive, but I will say with no hesitation, much better than the NHS or anything in the US, which is completely private. Okay, income tax. As in the UK, it's a sliding scale rate. I need to put my glasses. So you'll see that up to 11,000, you got 0, and the highest bracket is at 177. A difference which I would like to highlight at this stage between France and the UK is you do a tax return per household. So if you have Mr. and Mrs. John Smith, they will file only one return instead of individual returns. In simple, that actually lowers the actual total net income which you declare to the government. So you actually pay less tax on income in France than you would in the UK. Unfortunately, in 2012, President Hollande had put a temporary income tax on high earners that actually never been taken out and is still in force. So you can see there that if you earn, again, that's a foyer, so household income, between 250 and 5,000, you get a 3% flat fee on top of your sliding scale rate. So sometimes for high earners, it's interesting to diversify the source of income, and I can take questions on that and explain how we can avoid and mitigate this high income tax. Real estate wealth tax. Most of you are probably aware that in France, over 1.3 million of real estate. Your main residence is discounted by 30% of its face value. So if you got 1.3 million, you will pay starting at 800,000. So you got the band rates here. So that wealth tax is a situation of your property assets as of 1st of January of any tax return year. And you file your return in June. So people are actually filing their return now. Needless to say, you see that the threshold is actually quite high if you take into account the 30% discount on the main residence. So be careful when you purchase property to avoid being around that bracket. Movable properties. I've put that in the slides, but it's actually not applicable really. It's for people who bring on work of arts, Lamborghinis, Ferraris. They can be a tax, but for most movable properties, it's not relevant because these movable properties are considered as depreciating assets. Now, very important, UK pensions. So most of you on this panel would have pensions, private pensions, whether they are defined pensions or defined benefit pensions or defined contribution pensions. And when you are a resident in France, and if you keep these pensions in the UK, as I mentioned earlier, you can't get any advice from the pension provider. And secondly, having something sitting in the UK for a future in Europe, in euros, doesn't make much sense. So a lot of our business is how to move the pots that you have in the UK into much more efficient vehicles and wrappers in the EU for your life in France as it matters today. So that is a very, very big element of our business, and I suspect there'll be a lot of questions on how we can help you with that. Inheritance tax. Again, I said earlier that inheritance tax can seem complex in France. The main difference between the UK and France is the forced heirship. So there's no inheritance tax between spouses in France, but if you don't arrange your wealth in a proper way, you can't do as most British citizens like to do, leave everything to your surviving spouse, then the children. You have to make some amendments to a few documents. You have to use the right wrapper, and you can actually bypass, totally legally, obviously, the forced heirship. I can take questions on this subject because it is actually very easy. There's one and only vehicle that we use in France and in the EU to make sure that the wishes are met and that you're not caught up in the forced heirship, which sometimes is a problem. Also, I will add, we see more and more families, which we call in French recompose. It's a horrible name, really, who have children from previous relationship. That can create a nightmare in terms of inheritance tax, because children in direct line of a married couple are very favorably treated for inheritance tax. Children from previous relationship can pay up to 60 to 80% tax. So again, use correct planning in order to include them into the good wrapper to avoid this steal, really, of wealth. When I do seminars, I always ask the question, how many people in this room have children from previous relationship? And it's, I would say, more than 50%. So very happy to take questions on that. So tax on traditional asset in 2017-18 got in force in October 2018. There's a flat tax of 30%, which is very good. Capital gains, you buy, you sell, you've got a gain, you apply a flat tax. That flat tax is of 30%, but it includes also social charges. So it's actually a very good deal. I can take questions on that as well, because obviously, if you remember the sliding scale rate earlier, if you are at a lower than 30% marginal scale rate, it can be interesting to include your capital gains into your income and not pay the flat tax. But that's to be discussed on an individual basis. So basically, I summarize what we do as trusted advice made simple. I hope I wasn't too simple, but it was a bit deliberate. And then, again, we are two, Malcolm on the left, myself on the right. What a horrible picture. And then I'll leave that while we do the Q&A, if you don't mind, Chris, because you can just flash a QR code. Don't ask me how it works, but it works.
Yes, just get out your smartphone, wave the camera in front of that, and you will be able to get in contact with Jean-Pierre.
That's
okay. So that was really great. We've covered lots of ground, and you've told us all the things that we need to be aware of. And I suppose the big message is that it's not difficult so long as you have expert help. But there are major bear traps to fall into if you don't have that expert help. And I'm instantly noticed that 60 to 80% for children who aren't your own, because that's I'm certainly one of those 50% who will be caught up in that. Okay, so what am I going to do? I'm going to launch into the questions that we've been thrown in, and then if there's areas that we haven't covered, then we'll come back to those. So Steve is asking, what are the pros and cons of moving a pension from the UK?
The pros is that you are no longer in the UK, you are no longer in GBP, and you are no longer subject to changes of legislation. because you might know that there's an election in the UK, such things as lifetime allowances and all of that, which are on the table. At some stage, there will be some emergency taxes on moving pensions from the UK. The cons is that there's a cost of moving a pension pot from the UK to another wrapper. So it's just about weighing whether the cost and the benefits are in your favor.
Okay, well, a question that just occurred to me is your pension lump sum. So when you're 55, if you've got certain pensions, you can take 25% of it tax-free.
Yes.
Suppose I've already moved to France. Can I still take that tax-free?
Yes. Those who haven't moved to France should take that 25% lump sum.
So you take it out before you move to. If you're going to take the 25%, then you take it out first.
Yes, and absolutely, and that can be used. We see it often as a down payment for a property, for instance.
Sure.
So yeah, I would say that's a very good point, Chris. The people on the panel should absolutely haven't done the 25% tax-free drawdown. I mean, tax-free is tax-free, so why not use it?
Sure. Exactly. Okay. Billy is asking, can I withdraw all my pension fund to invest in my own Jeep business without incurring tax on the fund from the UK government?
No.
Okay.
No.
Okay.
Reach out to me because that's a very good question. No, you'll have to pay some tax. It depends on your age. Again, I can't be specific. If you're over age 65, it's easier, cheaper. But sorry, what was the name of the person who asked the question? That's a very good one.
That was Billy Webster.
Okay, so Billy, if you just either send me an email with your specific questions, you can be specific in the email, and then I'll liaise back with you in order to explain to you how it can be achieved at minimal cost. But tax-free, no.
Okay. Laura is asking, does real estate tax apply if I buy a property in France, but I don't move to France?
Does real estate tax apply? You mean the wealth tax?
I guess so, yes.
Wealth tax applies whether you're a French resident or not. It's on assets. Okay. It's only on assets in France if you're not resident.
Okay. Okay, sure, got it. Yeah. Jeremy is asking, is it correct to say that UK state and public sector pensions are still taxed in the UK, even if you're a resident in France?
Yes. And you're paid net in France. I mean, wherever you want. Yeah, tax in the UK.
Okay, sure. Tax in the UK. On the whole, is tax, would you say, higher or lower in
it will be much lower. It's a good deal to be taxed on a state pension or a public pension or an NHS pension or a Met Police pension. It's actually a very good deal to be taxed in the UK.
Okay. Now here's an interesting one from Andrew. If I'm living in France for more than 50%, i.e. for more than 50% of the time, working online for English clients on English problems and occasionally representing them in English online hearings, for taxes, am I running an English business or a French business?
You're running an English business, but you're a French resident. So you're subject to taxes on your worldwide income because you're spending 183 days in France. So you are eligible to you're deemed resident for that year. So my advice, if you don't want to pay tax in France, is just spend 182 days in any given year, and then you'll only be subject to taxes in the UK.
Yeah, and I'm also guessing, Andrew, that you might run into problems over a visa if you are working for an English business. But that's for a webinar for another day. Do look at our other webinars.
Yeah, there's a lot of visa issues. You're right, Chris.
So unfortunately, it isn't quite as easy. I mean, I'd be in a similar position where if we wanted to retire to France, my wife is younger than me, and she would be still working. So it's there's all sorts of complications. So I would certainly be contacting Chase Buchanan about
But
that.
we know how to do
Okay.
it. Again, it's avoiding mistakes, but we can help.
Okay, sure. So, question from Phil. Do you think there will be any significant tax changes for expats if the right-wing party wins the election in France?
Oh, that's a very good question. For expats, no, because in France you can't discriminate. That's a basic rule of our constitution. If there's a tax, it's for everybody. So there won't be a specific tax for expat, that I'm sure. Whether there'll be some more taxes for everybody, that I can't answer. But no discrimination, no more tax for expats than for French.
Okay, sure. Okay, Barbara has asked, once living in France and continuing to receive my UK state pension and private pension, which has been taxed in the UK, will I pay tax again in France?
You are covered by the double tax treaty agreement, which means that you don't pay taxes twice. In terms of the state pension, we've covered that. So you pay in the UK, that's fine. In terms of the private pension, normally you have to declare that on your French tax return. And under the double tax treaty agreement, if you've already paid taxes in the UK on that pension, if you have to pay more in France, depending on the level of the income that you draw, and that is going back to the sliding scale rate, you have a credit debit situation. If you pay more, then you get paid back. If you pay less, you owe more.
Okay, so we'll just carry on with some of the questions.
Of course.
So, tell me about the movable properties, because I think people might be a bit worried about that. I'm glad to hear it's not really an issue, but if I had a Lamborghini, I don't. I have a Volkswagen Polo, but if I did, should I be worried about bringing it?
You shouldn't be worried, but you should declare it, because it's
okay.
Because as opposed to a normal car that depreciates in value, a Ferrari or Lamborghini actually increase in value year after year. So there can be a capital gains issue, and you could be liable to a tax on importation.
Okay. Fine.
Because of the fact that it's an asset that's appreciating every year. Okay,
great. Well, in the meantime, we've had more audience questions in, so I'm just going to get through these, and then Christopher is asking, different Christopher, if I have a UK pensions taxed in the UK and I have a private pension also, is it advisable to have the private pension taxed in the UK or France?
Well, it's a good question. I always say if you live in France and you plan to live for the longer term, it's always better to move your pension out of the UK, because you don't know what the tax will be in the future in the UK. And I haven't seen many taxes that go down.
Okay.
Good answer. So okay. Advice is to move out of the UK, because you're not in the UK and you want to be in control of your future.
Okay. Mark is asking, what happens if I spend, this is complicated, what happens if I spend less than 183 days in France and work in the UK, but my wife and child who are going to school in France spend more than 183 days in France?
What happens in terms of tax?
I guess so, yes.
Complex one. I need to speak to that gentleman and have all the specifics, because out of the blue like that, I need more information in order to.
Sure, yeah, fair enough. Okay, great.
There's no general answer. It depends on a lot of parameters.
Sure. Okay, we'll get back to you on that one, Mark.
Sorry,
Steve is asking.
Yeah.
Can you hear me now?
Yeah.
You can still hear me. If I brought, Steve is saying, if I brought a large lump sum to France, are there tax-efficient saving products?
Yes, we have in France, and that's a very good question. Well, most of you are familiar with ISAs in the UK, which are great because they're tax-free. In France, we have something which it's similar to a bond in the UK. We call that an assurance vie, which is a kind of an ISA on steroids, because it covers a very tax efficient wrapper in terms of capital gain. It covers the inheritance tax, and also by the nomination of beneficiaries covers the unrelated children, from previous relationship I mentioned earlier. So yes, there is an extremely good vehicle in France for that purpose.
Okay, I think we need to call it a day eventually soon, but let's just ask this one question first.
Yes,
this from Rose. If you have a number of properties in the UK which are rented out, is it better to sell before becoming a resident in France, or are there ways to make it more tax efficient?
Not always. You don't need to sell them. Again, it's on a case by case. It depends on what you want to do first. We always put the client in the center of the equation. What do you want to do? If you want to keep them, how do we optimize the fact of keeping them and being tax efficient? We don't advise on doing things only for tax purposes.
Okay, great. I think we'll call it a day there. There are I'm sure we could talk all night, obviously, about tax.
Yes.
But I think we better call it a day. But do please get in contact with Jean-Pierre and his colleagues, and he will answer your specific questions. That's about all we have today. Thank you, Jean-Pierre, for a really comprehensive and thank you for holding it together and thank you to Patty too for holding it together while I disappeared while I was rendered mute. We strongly recommend that our viewers get in touch with Chase Buchanan Wealth Management directly to discuss their requirements in detail, and we'll be sending you a recording of this webinar so you can watch it again at your leisure. I would just ask, we just invite you to leave a review on Trustpilot if you found this helpful. It all helps to get the word out. So it remains me just to say thank you, Jean-Pierre, thank you, Patty, and thank you for tuning in. Bye-bye.
Thank you, Chris. Thank you, Patricia, and thank you to everybody on the call. Bye-bye.